Hi there, business owner. Are you looking to improve your business knowledge? Do you want to see behind the scenes of successful businesses? And more importantly, are you looking to build a better business in just 15 minutes each week? If so, you're in the right place. Welcome to the 3Bs podcast. Hello and welcome back to another episode of the 3Bs podcast, your go-to 15 minutes to help you build a better business each week. As always, I'm your host, Stephanie. Hi, I hope you're all doing well. And before we get into this week's episode, I just wanted to say, if you haven't listened to last week's yet, go back because I released a book, Finance for Life, last week. And thank you so much for all your support because it actually hit Amazon's #1 bestseller over the weekend and has been Amazon's #1 hot new release for 11 days and counting. So your support means the absolute world to me, and I wanted to take a quick second before we get into this week's episode to thank you all so much for buying the book, reading it on Kindle, whatever it is you're doing. It's really, really helping me reach more people, which, as you know, is something I always want to do and something I really get a lot of joy out of. Seeing people connect and engage with the things that I produce, whether it's the podcast or the book, it means the absolute world to me. So without further ado, I'm going to get into this week's episode. So this week's episode is the biggest financial mistakes small business owners make and how to avoid them. For those that don't know, I am a certified bookkeeper and accountant and a certified business development specialist, and I have been a bookkeeper and an accountant for over a decade now. I've been in practice for 3.5 years. I have my own practice, ABCS UK, where we support small businesses and we see a whole range of mistakes and we see a whole range of growth and different topics, which gives me a really good understanding on your business as a business owner from a general sense. Every business is unique and we know this, but from getting in all the businesses that I work with and all the clients that I work with, I can see trends and little things that business owners make. And if I can share those mistakes with you now and stop you making them, then I'm a really happy person. So with awareness and good planning, mistakes can be avoided. So some of these financial mistakes are really costly, both financially and with time to rectify sometimes, and can sometimes lead to the absolutely end of businesses. So if these mistakes you're aware of now, you can start to put plans in place to make sure that if it happens to you, that you can rectify it quickly and easily and without too much damage to your business or yourself, and also avoid them at all costs if necessary. We've made the mistake so you don't have to. On with the episode. So the first part of this is poor cash flow management. Now, cash flow is so important to every business, and you should know that as a business owner. You need cash coming in and you need cash go out to pay the bills so that you can get more cash to come in at the end of it. Whether you're product-based or service-based, it makes no difference. It's still equally important. So cash flow is the lifeblood. It's the heartbeat of your business. It's what makes your business a business and no longer a hobby. So some of the common mistakes I see with cash flow is that people don't track it properly or don't track it at all. They don't think it's important to track the cash flow in and out to make sure there's any peaks or troughs in your businesses that they're covered. So for a lot of retailers, January and February are really, really quiet months. Product-based businesses, February particularly, unusually is a really quiet month, and business owners forget that. And if you have regular outgoings such as rent, business rates, wages, you might not have enough money coming in that quiet month, and you need to make sure you've planned and put money aside from the bigger, busier months, maybe the lead up to Christmas or the January sales, to make sure that your cash is flowing and you can pay those bills that you have to pay in February onwards. Confusing profit with cash flow is another one that's a really common mistake that actually is quite detrimental to business owners, and I see happen all the time. Don't kick yourself if you're like, oh, I didn't know that. You only know what you know. And by listening to this podcast, I'm going to help you build a better business and gain the knowledge that you don't currently have. You started your business to do whatever it is you do, whether you're a hairdresser, whether you're a builder, whether you are an IT provider. You started your business to provide those products or services and make those things for your clients and for your customers. You did not start a business to do the accounts and to understand all this different complex jargon. That's why bookkeepers and accountants exist. So profit is what left after the business has deducted all of its expenses, but some of the expenses that are deducted is not physical cash that leaves your business. So when you think of the earlier episodes when we talked about the expenses you can claim on your tax returns, things like use of home allowance, that physical £26 a month that you can claim is not physical money you take out of the business. It's what we offset from your profit that you pay tax at the end of every tax year. So Profit is what's left after all of the tax allowable deductions have been taken away. Your cash flow is actual money coming in and out of your bank. They're two very different things, and it's important to track both and understand both. And if you don't, reach out to me or reach out to a bookkeeper or an accountant that can help you understand which one's which and what each bit of data means on your profit and loss account, on your cash flow forecast, because they'll help you understand it in an easy to understand term, which I think is really beneficial for business owners who are not financially minded or haven't had that financial education, to understand the bits of business finances and statements of accounts and things like that. And then number 3, one of the most common mistakes that I see in business owners when it comes to poor cash flow management is overspending without forecasting. Sure, there's a great deal if you buy 2,500 tons of whatever it is right now. There's a great deal on if you buy that new business vehicle. It's like, oh, well, actually, I want a new office chair, so I'm just going to fork out and go and get one. Actually, let's get the whole office new chairs. Let's get new office chairs for everybody without forecasting for that overspending, because you may get it on a long-term lease for a vehicle, so you might have to find the money every single month to pay that monthly fee, or you might have to pay a large amount up front. That deposit's going to make a huge impact in the cash you have available that month to pay the rest of your bills and to buy materials to keep building, or pay your software subscriptions if you're a service-based business. Overspending without forecasting for that spending, without planning to make that purchase, whether it's a long-term purchase or a one-off one, can lead to really bad cash flow and not be able to pay your bills. So I have a couple of tips to help with your cash flow management. If you're not already doing it, please do start managing your cash flow. It's really important to help your business. And as you grow and succeed, your expenses increase alongside your income. So you need to be very aware of any fluctuations or dips in your financial year to make sure that your cash keeps flowing and you can keep building that business. So use a cash flow forecast to track your income and expenses. There's free templates. There's lots of them available. We have ones that we can give to our clients that work with ABCS UK, but a cash flow forecast is really important, even if you just start by listing all the money that comes in and all the money that goes out of your bank for a month, and then see what is left. Aim to have a buffer of at least 3 months worth of your expenses, your overheads, the things you have to spend, whether your business makes money or not. Have at least 3 months. And at first, you're probably not going to have that. And if you don't have that saved, now start by putting away a percentage. 1-2% of every bit of money that comes into your account, you move to one side and start saving so that you're building that buffer up to prepare you for those drought months when things are a little bit quiet, or like February, for example. And invoice promptly and follow up on late payments. This is one of the biggest things that's going to help you in business, is make sure you invoice on time, make sure you invoice promptly. So what we see a lot with tradesmen is they'll work all week, long hours, doing all the plumbing, building, whatever it is they do. And then on a Friday night or a Saturday morning, they'll sit down and they'll invoice for the week. Now, the work you did on Monday, that's already 6 days sometimes since you've done that work. So invoice promptly, set up systems or processes so that your invoices go out as and when they should, as soon as they possibly can, because then the countdown starts ticking to when that invoice is due. And also, if it's a pay straight away invoice, then you can start following up sooner on late payments. Following up on those late payments, set aside time in your diary to send emails, make phone calls, or outsource this to a bookkeeper or accountant that can help you with your credit control. Get that money in your bank as fast as possible, because that's going to help you with your cash flow. The more money's coming in, the faster the money's coming in, the more you can use it to make wiser financial choices for your expenses and your overheads, or start saving that buffer. Something else that's another common mistake we see small business owners make all the time is underpricing products and services. Now, I started my bookkeeping business at £10 an hour, which really was not enough. But many small business owners, when they start out, set their prices far too low, thinking that either it will attract more customers or a self-worth issue, which is what it was for me. I didn't feel like I was worth more than £10 an hour, £15 an hour. And it nearly cost me my business, in all honesty. The underpricing means the money's not coming in, and that means your profit margins are squeezed. And the amount of business owners I see that are not taking a wage, are not paying themselves, that's not a business. That's not a job. That's a glorified hobby. We all need money. I don't know why it's such an unspoken topic and it's so taboo. We all need money. Money makes the world go round. We all have bills to pay, food to buy, all of those things. You are in business. You're looking to build a business. If you're listening to or watching this podcast over on YouTube, you need to make money. You need to have profit in your business. There needs to be more money coming in than going out. It's as simple as that. And if you're not pricing based on your unique circumstances, as well as taking into consideration what the market charge, like don't do a race to the bottom. If someone else is doing it for £20, don't go in at 19 unless you genuinely can do that, because a race to the bottom benefits nobody but the consumer. And then in the long run, those businesses start failing because they're not making enough money and the consumer loses that product or service. So nobody wins. Price yourself worthy. There's a book I read by James Ashford called Selling to Serve. And it is bookkeeping and accountancy related, but honestly, it opened my eyes into charging properly for the services that we provide in the practice. And the most common mistakes I see is that people don't calculate the true cost of delivering that product or service. Take into consideration all of your overhead, the things that you don't think about. Put your wages in there when you are calculating the true cost of delivering that product or service, because you need to take a wage. Also, pricing based on competitors instead of profitability is a common mistake I see. And again, it's that race to the bottom that nobody wants to do. Price based on profitability. Make sure that you are making enough money in your business to make a profit and pay yourself. And ignoring the value that they provide to customers. This is where I fell down. I wasn't seeing the value that I was bringing. I was like, well, I'm just doing their bookkeeping. I'm just doing their accounting. I'm just keeping them out of jail and keeping them compliant in the eyes of the HMRC. But I'm not doing that. I'm doing so much more in the practice. I am saving them time. I am reducing their stress. I am helping them get their work-life balance. I am helping them make more financially informed decisions so that they're having more profitability in their businesses. They're growing their businesses to spend time with their family. They're growing their businesses so that they can employ somebody so that they can take Friday afternoons off. I am helping business owners reach their goals on a daily basis. And that value is incredibly powerful and should be charged for accordingly. What we do differently at ABCS UK compared to everywhere else that I know of in the industry is that we see every client quarterly as a minimum. We sit down and we look at a whole business perspective. So one of my clients makes the bespoke seeds for a whole range of industries, both white labeled and their own brand. And nobody else in the industry does it. So there's no real competitor to price them against. But they were still working the old way with a paper catalogue that would be emailed out or sent out in the post, and then to reply back with an order form. And then we'd invoice them, and then they would make the order because they make them all by hand, and then send them out to the customer or the retailer because of the wholesale side. I was like, can we please, putting my business development brain hat on, can I please build you a web shop? I think having something that works for you 24/7 in the background when you're not around, you're going to look at a whole new demographic because you're going to reach the digital age, the younger generations who are all gardening post-COVID. They all will want they all want to grow their own fruits and vegetables where they can now. It's a very on-trend and fashionable thing to do. But these people don't do post stamps and filling in forms. Everything's done on a web shop. Let's do this. So I did that, and we did an analysis of November 2022 versus November 2023 sales purely on the retail side. And the increase was over 580% year on year, which is huge. And that is because the web shop opened. And not only that, I then taught them to do email marketing, and I taught their staff how to create email campaigns and push the importance of a marketing plan, and all the things I've learned building my business I have put into my clients. Now, most bookkeepers and accountants don't do that. And that value is huge for any business owner. The results speak for themselves. The increase in turnover and profit and all those things are testament to what we do at the practice. So knowing your value and understanding your value and providing that to customers in your pricing is going to help the cash flow, which is then going to help you build your business. If you have an issue with self-worth like I did, drop me a message and we'll get on a call and you can tell me what it is you do, and I will tell you the value that I can see in that business. And that will hopefully help you see how much value there is that you're not thinking about. Other mistakes I see business owners make all the time is not investing in financial education, not learning these things. But by listening to this podcast or watching this podcast, you clearly want to, and you're making a really good start into doing that. Not saving for taxes. So many business owners get caught up on their every quarter the VAT bill comes in, but they're spending all the money that comes in versus all the money that comes out, and they're not budgeting for VAT, payroll, your UAE, national insurance, or the corporation tax. If your business is making a profit and you're a limited company, you're going to have corporation tax to pay. If your business is making a profit and you're a sole trader, there will be income tax to pay. And that's a good thing, because that means your business is growing. Learn from our mistakes, learn from the mistakes that I've made, that my clients have made, that I've seen in business, so that you can build a better business with slightly less bumps in the road. If you found this podcast useful, please do like, rate, review, wherever you're listening to it or watching it on YouTube, because it really helps the algorithms get the podcast out to more listeners. And I want to help everyone build better businesses. And this is how I reach them. Thank you so much for listening. I will see you next week for the next episode. We are almost at episode 100. I can't believe it. See you next week. Bye. And that brings us to the end of another episode of the 3Bs podcast. Thank you so much for listening. Please connect with us on social media. Like, rate and review wherever you are listening to this podcast, so that I can help more business owners build a better business. See you next week.